Okay, ladies and gentlemen, we have just completed problem 2-2A. Well, the first part of it anyway. I've zoomed out a bit, and I apologize if this is small. I am recording in HD though, so if you need to sort of zoom in to see, you can full screen it. You should be able to get a high quality version of this video and be able to see everything. The reason I've zoomed out, I am going to need all the real estate I can get to do the next part of our problem. The next part of our problem is T accounts. We transfer all of our entries from the journal entry into a T account. In proper accounting, they might call this posting to the ledger. And all it is summarizing all of our transactions to figure out, like, for example, how much cash does this company have? I'm not sure. Are you sure? Probably not. So let's try to figure out how much cash and how much of every asset, liability, equity, revenue, and expense account this company has. So we'll start by making sort of sections here. So I'm going to have a section for assets. I'm guessing. It's tricky on these screens. Liabilities. I probably won't need that much room. Shareholders' equity. Capital E. Revenues and expenses. God help me. I hope I've got enough room. We'll find out. Okay, so let's start with our first journal entry. It says debit cash 1,000, credit common shares 1,000. So what we're doing is we're preparing T accounts, and a T account is just a big letter T with the account name on top. So cash, I'm going to make much bigger than all the others because cash had a lot more transactions flowing through it. I know that. So debit cash 1,000 means, okay, if I debit cash 1,000, what would you suppose? Should I write the 1,000 on the left or on the right? Well, debits go on the left. So let's write $1,000 on the left. Common shares, what kind of account is that? That is a shareholders' equity account. It can be a little itty bitty T. Why? Because it doesn't have a lot of transactions flowing through it. And I credit common shares for 1,000. So my debits need to equal my credits after every transaction. I can kind of look and reevaluate, or I can trust myself that I'm doing it right. Moving on to the next one. Debit rent expense, credit cash 600. Well, in expenses, I'm going to need to make a T for rent expense. 600, and I credit cash for 600. I don't need to leave a space. I just write the credit to cash right at the top. Next one, debit cash, credit bank loan payable for 5,000, debit cash 5,000, credit bank loan payable. This is going to go in the liabilities. I'm going to leave room for some other liabilities. Bank loan P for payable, and that was a credit of 5,000. Debit equipment, credit cash, credit AP for 1,000. Debit equipment for 4, credit cash for 1, credit AP for 3. Okay, debit equipment. I'm going to need a T account for equipment. I'm going to put it over here. I'm leaving some odd spaces, I realize. I'm actually mortified. I haven't done this in my software before. I'm mortified I'm going to run out of room. Debit equipment for 4,000. Sorry, what was next? Credit cash for 1,000 and credit AP for 3,000. AP, I'm going to actually need a fairly large or long T, and I'm crediting it for 3,000. So again, just big picture here. If we're asked to post something to T accounts, this is what we have to do. We just have to go from journal entries to T accounts. Next item up. Debit cash, credit, taxidermy revenue, 400. So debit cash, 400, and taxidermy rev, 400. Debit supplies, credit AP for 200. Supplies are an asset. This could be an itty bitty T. Credit AP for 200. Let's continue down the list. Debit AR, credit taxidermy revenue for 600. So back up. Debit accounts receivable, AR, for, I can't remember, I think it was 600. Yeah, and credit taxidermy revenue for 600. Okay, next on our list, debit dividends, credit cash for $500. I'm going to put dividends in equity. They are an account that lives to impact our retained earnings. Dividends, $500. Credit, was it cash, I believe, for $500. Next, debit utilities expense, credit cash for $200. Okay, so another expense here. Debit utilities expense for $200, and it was a cash expense, credit cash for $200. Sorry for scrolling up and down. I hope I'm not making you dizzy, but I just need to scroll a fair bit in this question. Can't think of a better way to do it. Debit AP credit cash for $3,000. Again, I'm on the August 20th transaction. Debit accounts payable $3,000. Credit cash $3,000. Debit cash credit taxidermy revenue for, I'm not on that transaction. What am I doing? Debit telephone expense credit AP for $200 for the August 21st transaction. So debit telephone expense $200, credit cash, no, credit AP, pardon me, $200. Next, debit cash credit AR for $600 for that collection. Debit cash credit AR. Next, debit cash credit taxidermy revenue for $250. Debit cash credit taxidermy revenue for $250. I keep calling it taxidermy. Debit salaries expense credit cash for $1,000. Last one. Debit salaries expense. Where are you? Oh, I got to make a new T. I can see it's going to be underneath my face here. Let me just scroll up a bit. Oh, I can't scroll up anymore. So I'm just going to have to live with it underneath. I'll put it here. Salaries expense. No, I've forgotten. $1,000. Credit cash. $1,000. Okay. So we've got our list of T accounts. We've done a fantastic job. Well, I hope so. Anyway, it's actually tricky for me to do this one, I got to admit. So we want to total all of our T accounts. And to total our T accounts, what we need to do is we just need to add the debits and add the credits and take whatever side is bigger minus whatever side is smaller. So for example, all of these expenses are already totaled. Telephone expense, $200, utilities expense, $200, rent expense, and salaries expense. And we don't need to do anything. I don't need to total and say, oh, it's $200 plus 0 is $200. No, they're done. Taxidermy revenue, I have 3 credits, $400, $600, and $250. If I add that up, I get $1,250. Since they're all credits, I just total on whatever side they were on. Dividends are fine, common shares fine, bank loan is fine. AP, I have $3,000 in debits. I have $3,400 in credits. So I have different amounts on different sides. I take the big side minus the small side. The big side minus the small side. So $3,400 in credits is bigger than $3,000 in debits. The big side minus the small side. That means I have $400 in accounts payable. Equipment, $4,000, nothing to do there. AR, $600 minus $600, 0. The reason I wrote it on the debit side, it really doesn't matter. But the reason I wrote the 0 on the debit side was just because AR is an asset. Assets are considered a debit account. Cash, this one's the tricky one. I'm going to have to try to get a calculator up here. See how I do. Oh, look at that. I got it to come up. Now I just need to let you guys see it. Okay, so we've got our cash T account here. Let's add up our debits. 1,000 plus 5,000. That was a small miracle that I made that work. 600 plus 250. 7,250 on the debit side. And on the credit side, let's add that side up. 600 plus 1,000 plus 500 plus 200 plus 3,000 plus 1,000. On the credit side, I have 6,300. You wouldn't normally write these amounts down. You would just do them behind the scenes. Let me just clean that up. I know it's a little messy. 6,300. So the big side is 7,250. The small side is 6,300. Take the big side minus the small side, and we get 950. The big side gets the balance. And I shouldn't be surprised that cash would be in a debit balance. Now, this begs the fundamental question. What do we have in every account? We can look on this sheet and figure out what we have in every account. But this is called a ledger because it shows every transaction going through every account. A simpler document that just lists the ending balance of every account is called the trial balance. And we're going to learn how to prepare one of those in the next video.